Before we get to your Canadian equity dream, Candace, let's talk about here a contested election. It's going to be so close in so many states. Do you, like Morgan Stanley, view this as a great market risk?
Yeah, I think between now and the election, we're going to see more periodic bouts of volatility, something that we haven't seen for several months, of course, after the strong gains that we've seen through the summer. So for now, between now and November, expect more of what we've been seeing here in the last few weeks. Markets are being whipsawed on various news stories coming in, whether it's COVID, fiscal support. But of course, the U.S. elections are going to play into that higher period of volatility in the markets.
Yeah, I mean, and that certainly is the risk. And all Morgan Stanley and others have warned about, Candace, is it's volatility. They're not saying markets are going to collapse or markets are going to soar. They're just saying you got to watch out, because if you think things have been volatile now, they could be more volatile. If you believe that's the case, and it sounds like you do, what do you do at Fiera Capital to protect yourself? Are you buying options? Are you buying bonds, putting more money in cash? What's the playbook for this?
Yeah, so in the short term, you're absolutely right. It's going to be an uneven, bumpy market. Like I said, something that we haven't seen for quite some time, since back in early 2020. The good news, however, is that downside should prove fairly limited given that unrelenting support from both central banks and governments. This should help to place a floor under the markets. So longer term, we're in a bit of a holding pattern right now. We expect markets to exhibit a little bit more volatility than what we've been used to. But longer term, there are some opportunities being created because we are optimistic on the future for the global economy and, of course, for global stock markets.
All right, when we're able to freely move around again, I can't wait to get on a plane at Newark and head into the YYC or the YYZ. Great song, by the way, but also a pretty good airport. Why do you believe, Candace, that better money-making opportunities are to be found in the Canadian equity market, and how might our American audience take advantage of that?
Yeah, absolutely. Well, the outperformance that we've seen in stocks since the March lows has largely been driven by growth, technology shares. Investors have been flocking to these sectors for the promise of growth in what's been an uncertain macro environment. Going forward, we expect the global macro backdrop to improve substantially, given that there's an increased likelihood that a vaccine becomes available. This will help to validate that narrative for a stronger global growth recovery. Of course, I mentioned the sheer abundance of policy support out there. This should bode well for those value-oriented sectors that are levered and linked to the fortunes of the global economy. These sectors have lagged since March, and this is where we see opportunity going forward. So those catalysts that I talked about, the vaccine, the more sustainable and durable global recovery, should help to facilitate that rotation from growth, which we believe is overbought and a little bit overextended, to value, which is a more underappreciated sector of the market.